The big winner on the Dow today was Verizon. It wasn't that big a winner. That's the kind of day it was. Caterpillar was the biggest loser. It's been hit every time there's trade wars concerns, of course. Caterpillar down about 2.5%. Over in the S&P, Darden Restaurants a big winner. Another strong earnings story of nearly 15% today. Marathon Oil down 5%. Mike, why did we weaken so much? There weren't even that many headlines. There was not a major trade story to point to in the afternoon. Nothing like that. What do you think's going on here?
The market has just seemed kind of heavy and tired for a couple of weeks now. You had the strength in the big growth stocks, the NASDAQ, and to some degree the Russell 2000. You got the feeling people kind of hiding in there tactically for a while, and those gave way a little bit, just some profit taking, just a pullback, and there was nothing to take its place. So, I also think the market's noticing that global markets have been very weak.
Yeah.
I mean, the Chinese market is in a real vertical downward slide right now.
The Chinese market looks terrible, and the economy doesn't look that great.
And the European markets are well 5 to 10% off their high. So it's not any critical stress point, but it does feel as if the U.S. market had outperformed to a degree. I think right now the broad S&P still looks like it's in the context of a 3% pullback after a 2-month rally, not necessarily at a critical point, but you have to pay attention because I think that traders have started to pay attention.
So I wonder, are people thinking that the U.S. is in a position of relative strength in spite or because of everything that's happening on the trade front right now? Or why is it that the rest of the world growth seems weaker? It's just every time we have someone come on and tell us they want to invest abroad, but the returns are just not there.
It is, and I think they still really haven't gotten, especially Europe, the banks are still in trouble. If you go overseas, other markets kind of slowed down. And people look there and say, well, what else are they going to use to grow? Because so much monetary policy has been used. You look at the U.S., and right now you're seeing people take money off, too, because people are looking out, especially the traders. What is the catalyst for the next 4 to 6 weeks? Maybe you have something in financials, but that really hasn't helped at all anyway. We had really good, strong earnings. They all came down. So right now it's just wait and see. And for us as investors, this is kind of when you look and say, well, what are the high-quality companies that are being sold off because all these discussions are happening?
Any one or two in particular that you like right now?
I mean, if you look at in industrials, companies like Honeywell, which we think are world-class companies, you want to add to those type of positions. I think that's kind of where you want to look at. Even in sometimes in the home builders like Stanley Works, that's come back down. That's a really good company.
Yeah.
Might not work for a quarter or two, but I think longer term, that's kind of what you want.
It reminds me, Steph, you keep getting opportunities to buy Caterpillar.
Unfortunately, yes.
And today, was there even, a headline to point to, a reason for another 2.5% drop here?
Well, right from the beginning of the day, we had the Daimler news, right? Then we had a disappointing Philly Fed, and that was the first really disappointing manufacturing number that we've seen in a while. So I think that kind of just added to kind of the concern. And then you had crude, and we're all wondering and waiting for OPEC and the ups and downs of, although crude actually itself hung in there pretty well, it was the stocks, the sector that got slammed. So you just had this risk off feel all day long. And of course, I think it's still all about trade, right? Trade and the Fed and the uncertainties about the Fed. And why is the Fed tightening when the ECB is never going to be able to pull away from QE at this point, and BOJ is like years away. Right. So it's like there's a lot of uncertainty, and to Sarat's point, I think we don't really have company-specific fundamentals for a couple of weeks until we get earnings. We'll hope that earnings will help, but at the meantime, it's risk off for the time being.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.